this morning. Here it is on the Nasdaq. Here are some of the culprits. That's the gap open down, the gap open up. Trade management, very little gap open up on the NYSE, by the way. The gap open down on the Nasdaq comp. Once again, here it is. That's the depth of the list. The gap open up list on the Nasdaq comp is very diminished right there, a couple of stocks. What that means is off of that bottom, what that price volatility is, getting that entry off of that bottom, and then once you do get the entry, that in the application things have to turn around very strong, very quickly. And that some point that you hit that bottom at the lower tier level, and then that knife hook would be much greater than any day since the original reversal. Rather that be today or tomorrow or next week, that's going to be a key ingredient. So when we're getting the entries off the bottoms, MMTs, we're selling back from the negative ratio. Now that we have a small gap down in the futures, S&P is only down 1.23 because the closer we get to the opening bell, that's where they leverage those futures up, and then we'll have a lot of volatility on that opening bell. In that first 20-minute trade is where people are going to be selling, people are going to be buying the dip, but then we're going to level in there. And yesterday we had great trades off the bottom that went straight way up, but then they all failed at the short side of the tape. Same trade remains. Buy the left elbow gap down, taking it off the bottom, the minute that the bid and ask ratio and the IR in your platform hits a peak, stops, time to get out and go short, because that trade is still there. That bottom up, accumulation bottom up, just isn't quite there.